Is the wind out of the sails of our Calgary and area real estate market already? Darren, have I missed the window? Is the market starting to cool down? I knew this wouldn't last. People were overpaying earlier this year and it's gonna bite them in the butt. I just knew it. Have you heard some of this or been a part of some of these talks? Come on, I know you have. Well, I'm here to tell you, they are out there, and they are out there in droves, even within the real estate industry members themselves. See, the reality is most people, even us realtors, are reactors to the news or reactors to the market. Not really in a position of strength to fully understand what is going on, and that's okay. Well, maybe no, that's not okay if you're the realtor part. So that's why I love creating these updates for you, to give you as much of the straight talk to curb any anxiety you may have on today's current real estate climate. So without further ado, let's get to this month's update. Let's start, as we always do, with the sales summary. So first thing you may have heard is that sales have dropped. Well, yes, they have. April 2022 did not record as high of a number as we did in March. But honestly, nobody would have expected that, nor was it needed to show sustained positivity in our housing demand. That was a unicorn month and one firmly planted way up there in the record books. April did, however, see an increase in sales over last April, about 6% overall. This did vary widely between the property types. See, detached saw a 9% decline in its sales, while row and apartments saw gains of over 40%. And then our semi-detached market was basically flat. How can there be such wide variety of gains, you may be asking? Well, honestly, it comes down to a few simple things. So number one, inventory. With more inventory hitting the market and actually on the market to buy, well, you'll naturally see a higher number of sales while we're in this seller's market like we are. Each of the four markets saw a drastically different new listings to market picture throughout April. And then there's number two, pricing. As house values increase, affordability, well, it's coming into question. So buyers who haven't seen increases in their pay to match the price changes, well, they turn from detached buyers to semi-buyers, or semi-buyers to row, or even row into the apartment segment. That's just natural. Now, this variety of sales activity isn't only being seen in our metro market in Calgary. As we extend our lens around Calgary, you'll see a similar dynamic happening. Airdrie recorded 24% more sales than last year, but Cochrane saw 20% less. And then Okotoks, well, 9%, similar to Calgary. Again, the two factors I just mentioned come into play here, and I'll explain a bit more as we go through this update. Okay, let's turn our attention now to the inventory story. So as a whole, we saw less new homes hit the market this April than last April. This was the first time in a while that this has occurred. Now, it's not even across the board again. Here's that breakdown. Detached homes saw a drop of new properties come to the market over last year by about 8%. Semis down 17%. But then again, our row houses saw a 24% increase, and then apartments again saw 7% slight increase in new listings. So if you followed me so far, you'll notice this trend. Less new listings to look at for buyers in the detached market, a drop in sales. An increase in new listings for row homes, an increase in sales. It's just part of the ebbs and the flows of our markets. And there is no need to panic as a result, as what I've heard, as many are doing. Same is happening in our satellite markets. New listings in Airdrie is up, so are sales. New listings are down in Cochrane, so are sales, etc., etc. So here's the hard facts that's resulted. As a whole, sales remain up, inventory remains down. And when this happens, pressure on our housing values, well, they just simply go up. It has to be that way. Let's talk about that now. The pricing picture. Okay, year over year, our total benchmark price in the region went up a whopping 17%. Detached at 19%, semis at 16%, rows at 17%, and then again, apartments are up to our biggest year over year gain since about 2006 at 8% price growth. The satellite regions are even performing better. Airdrie stealing the show at 33%. Canmore, again, 29%. Cochrane, 24%. And then it trickles down from there, but all incredibly positive. The home value increases we started to see in 2021 are continuing to build strength And the sustainability of this run is proving itself more each and every day. So let me explain. Well, first thing, it's everywhere. Check this graph out. There isn't a sector that isn't at least achieving 8% year over year. The entire market is now getting fully into gear. Shows strength in all price ranges and all economic situations. We're only just getting started, as number 2. As you can see, we've only seen really 1 year of an upward trend. Pre-COVID, Calgary and area had very little to cheer about. The COVID hit us in April 2020, and that was our rock bottom. 2021 was our awakening year, and it handled a lot of the pent-up demand from 2020, and then probably even before that. Then, this year is our first true representation of our market performing fully on its own without all these outside factors. And when a market starts to adjust upwards, it doesn't happen just once or a couple of months. It becomes a 3, 4, 5, 6 year run. We are just at the beginning. And then this, first fix, then reward. See, the biggest issue back in our dreary Albertan days from 2015 to 2020 wasn't that demand for buying homes was just so low. No, it's that we backed ourselves into a corner because the total number of homes on the market got way too high. So it put negative pressure on us for years. So we had to take a few years to correct that, which means it took a few years to go from a negative year-over-year housing to then a flat situation, and then now placing us in this position where we're seeing value bumps. This again is where we are currently starting to see. And like I said earlier, we are seeing this everywhere, across all Calgary's 8 districts, and then across the entire region. The rewriting of our Alberta script from COVID, oil prices, diversification, the unaffordable costs of living in the other major cities in Canada, and the still historically low interest rates, yes, despite those recent bumps, still historically low, has created a sustained path to increased housing prices. And shown by the screen here, this gap, well, it's here to stay for a while. All right, speaking about pricing, I figured I'd share one very interesting fact for those homeowners out there listening. As of this month, it marks a $100,000 increase in the benchmark sales price going back to the beginning of 2021. So congrats. The average Calgary homeowner has added $100,000 plus to their overall net worth statement. Now that's, of course, if you haven't taken on any household debt and all those other changes. It's a very positive sign for Alberta. With increased equity in our homes comes so many positive things for economic growth in our region. Okay, you can tell I love talking about this stuff, and I could talk on this for hours, but I won't bore you. So if you have any specific market information related info that you need for your scenario, just contact us so that we can connect you with a specialist for your area here at Redline. Thanks again for watching. Don't forget to subscribe if you haven't already. Come on. And please share this with as many people as you think need to hear this news. Thanks for watching. See you next month.